Morning. So my name is Matt Pearce. I'm one of the managers in the Radius team, which deal with R&D tax legislation and patent box within shorts. So what I'm going to do this morning is I'm going to run through an overview of what R&D tax is at a very, very high level and try and explain to you why it's important with modern day business that R&D tax credits and patent box is absolutely essential to help build a successful business. So a very, very brief overview of R&D tax relief. So introduced in 2000, R&D tax credits were introduced to stimulate innovation within UK businesses, okay, to facilitate growth through the development of new products and new processes. And the high-level figures we have on the table right now are, if you're profit making, about 24.7 or 25% of eligible expenditure. If you're loss making, about 33% of eligible expenditure can be recovered against R&D tax relief. And under RDEC, which I'll come on to in a little bit in a little bit of time, which is its own beast really, about 10.5% of eligible expenditure can be recovered against R&D tax relief. So they're the really high figures. If you're looking at doing an R&D project within your business, depending upon where you are, profit making, loss making, or RDEC if you're doing any kind of grant funding, they're the very high level figures you need to be looking at if you're looking at putting costs into an R&D project. So, what is R&D tax relief? Okay, so R&D tax relief can be claimed by SMEs, large companies. You must be incurring costs within the project, and you must be undertaking a qualifying R&D project. Okay, this isn't just white coat research. There are specific guidelines which HMRC set for R&D, what classifies as R&D for tax purposes. Okay, so there's two schemes with the R&D tax scheme. There's SME scheme, which is small to medium enterprises. So this is below 100 million euros turnover and below 500 staff. If you go above that, you're into the large company scheme or the RDEC scheme. Okay, these both two schemes are very separate, very complex. And I've got a very short period of time today to talk through these, but I'm here to answer the questions, and please give me a shout after if you're concerned about the two schemes and how they split up. So, what is qualifying expenditure for R&D tax relief? Okay, staff costs. If you're doing an R&D project, these are the kind of key things you need to be monitoring up on. Is your time, so any gross salaries and actual salary expenditure by staff. Your pension employers' pension contributions, employers' NI, any kind of subcontracting costs. So if you do not have the capability or the capacity within your business to carry out a part of the R&D project, for example, if we're developing a new piece of equipment or a new material, we need to go away and send that for testing and validation. Okay, we can't do that within our business. That is an eligible subcontracting cost. If we have an EPW or a member of an agency staff to support the R&D activities we're doing, again, those EPWs or those agency staff, because they've got a third party involved, they are also qualifying expenditure within an R&D project. A lot of people don't understand what EPWs are, so it's very, very complex, but please, obviously, again, let me know if you've got any questions on that. So one thing people do fall over on is consumables and materials, okay? Material costs within an R&D project have to be consumed on the project. They cannot be commercialised. So if you build a prototype, so we're building a new camera, okay? We're building a new camera, we build our prototype, all right? That has to be binned off. You cannot then sell that prototype on because those costs are eligible, okay? Or building a new lens, for example. We built the new lens, that has to be scrapped off or has to be consumed on the project, okay? That is an eligible consumable cost. Heat and light. We're doing a project, we're utilising energy resources, we're using heat, we're using light within the business. Those costs are going through your P&L and they can be consumed on the project. Non-capitalised equipment, again, we're building a new piece of photography. I'm picking up photography on your shirt here. So we're building a new piece of photography equipment. We need to have a piece of equipment to help us build that, okay? That has been capitalised, it has been put on the balance sheet, it's utilised on the project purely against R&D. Again, some of those costs can go through. It's really, really important on that point to speak with your accountant, speak to an R&D specialist if you're looking to put equipment costs through against a project. And software licenses. So software licenses such as CAD, CFD modelling, all these kind of licenses and purchases can go through. And grants. If you're doing a grant funded project, I highly recommend you look at whether you're eligible for R&D tax relief. I'm very short on time, so I'm rattle through these now. So, what is a qualifying project? So, a qualifying project has to seek to advance in knowledge and capability within the industry. Okay? You need to seek to create an appreciable improvement in product, material or service. So you have a baseline within the industry of where you're sat at the moment. You need to show you're stepping above that. Okay? It cannot be solely an improvement with the company. So we're developing our own internal processes. So we've got to have a CRM system, for example. Okay? We go away, we build our CRM system. It's bespoke to us, it's fit for our purpose. It works perfect for us. Okay? But it doesn't advance the capability within the industry because it has no broad application beyond our own intrinsic requirements, okay? Whereas if we built a CRM system, we went out to the market, went, right, okay, we can't use these existing platforms, we can't adapt them to what we need, we need to build something new. So we then had to go away, you had to understand, you had to research, you had to develop. I'm using this as just a basic example, okay? But we had to go away and went, right, okay, what's the market's not applicable. We need to go and actually build something, we need to develop something, we need to research what are the requirements, how do we do it? Time, cost, material, software. Okay? That's how you build an R&D project. Okay? So it applies equally across all sectors. It's not just white coat research. It's not just people in laboratories doing R&D. Okay? Any business, if you're developing something new, if you're developing knowledge within your industry, if you're developing better processes, better materials, you can be eligible for R&D tax credits. Qualified against the business guidelines. One thing I hope that you take away from me today is, one, engage a specialist, and two, if you're looking at doing an R&D tax credit claim, that is your Bible. Okay? The biz guidelines are what HMRC use to measure what is an R&D project, or what is R&D for tax purposes. Okay? If you're considering to do an R&D tax claim yourself, or you're working with currently working with an accountant, I strongly recommend you download the biz guidelines on the DOGA website and use that as your Bible to put it together. If you've got any question on the biz guidelines, please give me a call, because I know it verbatim pretty much. Okay, so right, so triggers. I think we've covered most of these already. Do you have technical staff? Are you designing something which is non-standard? Are you in a market leader? Are you the bleeding edge of technology? Are you developing new products and processes? Has bespoke software models been developed and these have been fed through into new products and processes? One thing which Keris is going to touch on with regards to patents, have you got any patents within the business? It's absolutely essential. If you have patents in the business and you're developing new products and you have IP, you need to look at your doing R&D tax credits. Have you ever tried to complete a project that failed? If you conducted a project, it doesn't need to have a tangible output. Okay? It can be a feasibility study, it can be an idea. As soon as you put pen to paper, as soon as you start building those ideas and building that project up, that is when the R&D process starts. Okay? Because you have direct and indirect activities, your support activities, and you have actual direct tangible outputs. Okay? If it fails, all part of the R&D process, it doesn't need to actually come to fruition. Okay? So, one thing which is pretty on the tip of everyone's tongue at the moment, if you're currently doing an R&D tax claim, what are the changes coming into fruition in April 2023? And I'm going to read these verbatim because it's really, really important. Okay? Cost of buying data used for R&D, such as cloud hosting, will be allowed. So this is really important because a lot of software companies use servers such as AWS and a lot of cloud server requirements, and this is a huge cost against their business, and currently those costs can't go through against R&D. It's a massive, massive impact against their claim, but HMRC have recognised that it's now going to be eligible under R&D. Pure mathematics will be deemed as qualifying R&D. HMRC will launch a digital form that will be mandatory for all claimants, so this is now going to go onto online. It's not going to be complicated at all. It's not going to be difficult to use whatsoever, but we all now we need to submit this all online. Okay, so any new claimants, if you haven't claimed R&D tax credit in the past, you need to pre-notify HMRC within 6 months of your year end. And a really, really important one, a senior officer, so if you're a director in the company, you need to sign off your R&D tax claim now. Okay, as of next year, April 2023, and you need to notify HMRC who has advised you on that R&D tax claim. So whether it's your accountant, where it's someone like myself, where it's a boutique R&D tax advisor, HMRC needs to be aware of where you got that advice from. Okay, a really, really critical point, expecting more HMRC inquiries. Who has heard about HMRC inquiries against R&D tax credits? Yes? So expect more. If you've done an R&D tax credit claim in the past and you haven't already had an inquiry, it doesn't mean that you aren't going to get an investigation in the very near future. And anything with tax legislation, they can go back up to 4 years. Okay? I'm not going to rattle through these figures. These will be available. This is basically how it's going to impact cash-wise and actually the tax benefit with all these changes. Okay? The big thing we need to take away from this is if you're loss-making SME, that's going to have the largest impact. Okay? If you're loss-making SME, you can either carry the losses forward and cash those in at 14.5% at the moment on the R&D tax credit. You know, reducing the enhanced deduction down to 86% and then reducing the tax credit down to 10%. So the actual tax benefit if you're loss-making, which is where R&D tax really, really helps businesses in the early stages starting up and doing R&D. That is really where they need that cash injection to help facilitate those R&D projects and keep them pushing forward. It's going to really, really impact those guys. Another thing we take away was RDEC. So if you're doing grant funded projects and pushing, if you're doing Innovate UK, for example, or project through notified state aid, you know, you're going to really, really benefit making sure that you do an R&D tax claim on those projects. So grant funding, there's a huge link between R&D tax credits and grant funding, and that's through the RDEC scheme, which is the Research and Development Enhanced Credit Scheme. So if you're doing an Innovate UK project at the moment, or you're doing a project which is funded through notified state aid, you need to be looking at R&D tax claim. Okay? Because there's a clear link, as we discussed, with generation of foreground IP, the exploitation of results within R&D processes, and a direct link between IP. Patent box. Now this is a completely separate entity, but it links very clearly with what the Shakespeare and Arsenal we're going to talk about in a minute too. Well, patent box, high level figures. If you have a patented product within the business and if you have profit generated from those patented products, you can benefit from reduced corporation tax rate of 10% on those profits. Okay? There's a lot of calculation that goes behind that on how you come out with that number, but on a high level, if you have a patent, if you're generating profits based on that patent, and you're doing R&D within the business, you can benefit from a reduced corporation tax rate of 10%. So what qualifies? So a company must hold a UK European patent. Patent box applies to income derived from patented products, as I said. From patents pending, so if you have a patent pending and you enroll in the patent box scheme, you can accrue those profits over a period of time and then it'll catch up once the patent has been granted. The company must have played a significant part in the development of patents, so you need to be doing an R&D within the business. You have to develop the products yourself. Okay, you can't just buy patents and then benefit from the patent box scheme. Really, this last slide encompasses what we're here for. R&D tax and patent box, why they're important for business success, and sometimes why they have looked in business success, is, you know, even with the changes in April 2023, it's still a very generous incentive designed to reward companies that invest in R&D, both grant funded and internal. There's a huge risk in doing R&D within the business because you don't know what that return investment is going to be. You don't know if the product you develop is actually going to benefit from it. So it de-risks some of the work and some of that cost you're going to put against those projects. When you're loss-making and you're just starting out, you need that cash injection. You need to have that cash come back into the business, which can be facilitated through R&D tax relief. If you're profit-making, if your business is successful, you can reduce your corporation tax return, okay, based upon R&D projects. And as I said, it's industry agnostic. It doesn't matter what industry you're in. If you're doing R&D, if you're doing something interesting, if you're doing something innovative, if you're doing something which steps outside the norm, you need to speak with an advisor. You need to give me a call and go, Matt, what do you think about this? Is this project good? And then we can talk through it. Okay? So it's not just people in white coats, it's not just people in labs, it's everyone in the industry.